How do payments between travel sellers and airlines work under the hood? Paul van Alfen, a travel payment strategist and managing director at Up in the Air, answers questions from 𝗲𝗆𝗃 to untangle the complexity of the flight payment process. What is BSP Cash?
BSP Cash is the clearing mechanism that was introduced by IATA in the early 70s of the last century, where basically any tickets issued by travel agencies on behalf of airlines, where the travel agency collects the funds from the end customer, if it's corporate, if it's leisure, are then basically summarized by the local clearinghouse, by the local BSP, so that the travel agency is billed on a weekly basis once for all the tickets issued for all the airlines that they have issued tickets for. So there's a single payment for multiple airlines. And on the other side of the equation, you have the airlines that basically get a single deposit from all the travel agencies. It is by country, so it can also be by currency, but it is a clearinghouse mechanism that makes it possible for travel agencies to get billed. And by the way, that's both for sales made, but also for refunds being received back. There's a single amount being settled every week between basically all the accredited travel agencies and all the IATA airline members that participate in the BSP. So it's, and by the way, it's something that other industries would love to have, like the hotel industry would love to have that, because the airline industry is much better organized and also much more condensed. You know, they have done it already at an early stage, and it's still a very powerful and robust way to move funds between airlines and travel agencies.
How does the end-to-end payment flow through BSP Cash look like?
So it's decoupled, right? So the pay-in by the end customer, again, it could be a corporate customer, corporate travel agency, travel TMC on one side, could be a leisure travel agency, brick and mortar, online, whatever. They would sell a ticket, maybe in combination with a hotel and a car rental. They would collect the funds in whatever way, in whatever currency, from the end customer. You know, could be literally cash. Unlikely. It could be a debit card, credit card, it could be an account-to-account transfer, it could be a different amount. I mean, that's completely decoupled, so that they're completely flexible there. And then they receive all those individual payments, and then based on the agreements made, they would then pay the individual suppliers, and then the airline would. It's a possibility for the airline then to bill the travel agency for the amounts due. And then they deduct the credits, the refunds that they also do. So then there's a single amount. Typically, it's the travel agency is direct debited, so the money is pooled from a bank account and then moved to an IATA bank account in that particular country. And then IATA collects all these funds and then channels that to the airlines over the IATA clearinghouse rails on a weekly basis. And typically, I think it's about. After that process has been done, it's about 2 weeks before the airline receives the funds. So the cash flow between tickets being issued and money received is somewhere between 2 weeks and 4 weeks, sometimes a bit faster. But it's that's because it's a global clearing system, and all those funds are bundled and reporting and then handed over in one go to the airline.
What must agencies do to qualify for BSP Cash?
To qualify for BSP Cash, you also need to go through an assessment, and you need to have a kind of it's called a remittance holding capacity, like a credit line up to that amount you can issue tickets. And then you first have to actually hand over the funds before you can create new tickets. But I think the accreditation, looks at quite a lot of things about, the financial stability of the travel agency. What's the risk of, in the end, payment not being made, whilst IATA resolutions stipulate that once ticket has been issued, the airline has to honor the ticket. So if in the end the travel agency does not pay the bill for those tickets, then it's a loss for the airline, and hopefully they can recover that from the bond that's in place. But it's always a lengthy process that might take years for the money to return. So there are a couple of safety measures in the middle to make sure that the travel agency is very likely to pay, and if not, that there's a bond, an insurance, or again a guarantee in place that if they don't fulfill their their obligations to pay the airlines, that then that money that's been held in deposit is then used to pass it on to the airlines.
Why are requirements less strict if paying with a BSP cash alternative, IATA EasyPay wallet?
The qualification criteria are much less strict, right? So because it's all prepaid and there's therefore no risk for the airline, because once you can only issue a ticket when there's funds in the prepaid account, and that's then flagged as being blocked for that particular booking. So once the money then moves out of the wallet to IATA and onwards to the airline, there's no way that it fails, because the money is guaranteed in that prepaid account. And that's not the case with BSP Cash, where payment only takes place 1 week, 2 weeks, 3 weeks later. So there's always a window where things can go wrong, and then the airlines at risk of non-payment.
How can agencies working on an agency model handle flight payments via IATA BSP?
It would only work if the travel agency would enter the card details of the end customer, and then would pass on, that's called BSP card, that would pass on the card details in the booking in PNR to through the GDS through the BSP, and they will then make those files available to the airline. The airline will then receive the funds directly, and if there's been any agreement on commissions, then those will be paid out later to the travel agency. But the key difference here is that in the agency model, the travel agency is not in the money flow, right? So they would not receive the money up front and then pass it on. No, they would basically make the payment details available to the airline. They would collect the funds and then return a commission, again, if that's been agreed, to the travel agency.
Do low-cost carriers participate in IATA BSP?
As a general rule, low-cost carriers obviously prefer the direct channel, right? Their own website, their mobile app. But to reach the corporate travel base, they typically also sell on the GDSs, certain fares, and those, for those they're participating in the BSP as well. So they could say, well, we only accept, for instance, corporate cards or credit cards for those bookings, but they can also, if they're a member, they can participate in the BSP as well. But that would be for a relatively small portion of the total sales, where for a network carrier, it will be quite a sizable portion. I guess sometimes if a network carrier would sell 50% through the indirect channel, then half of that would be BSP cash. So that it's a big chunk of business. For a low-cost carrier, it's probably single digit at best.
How does ARC?
I think first of all, ARC serves only one market, US, and that has very specific payment culture, heavily dominated by cards. And you see also that if you look at the traffic, if you look at the split between card and cash, for ARC, that's like 90% is paid by card, predominantly customer cards, consumer cards, and a small portion is virtual cards and corporate cards. And for BSP, it's about 50-50, right? So you see that the markets are so different. Again, it's a single market, huge volume versus like many different markets, sometimes some with smaller volumes, some with larger volumes, and with also very many different payment cultures. And till now, I mean, it's growing, but till now, for instance, the use of virtual cards in the US is still pretty small, pretty limited, and also the billing part of it, where agents get billed, like I said, is only a small portion compared to BSP. And next to that, I think ARC plays maybe a bit of a more active role in taking over the role of payment collector from the agencies, and for instance, accept alternative forms of payment also for NDC with ARC Pay. So yeah, there are some differences, but again, there's definitely a lot of overlap, but also quite a lot of differences in the business models, again, due to the markets and the size of the market as well, and also the forms of payment that are prevalent in the US versus the rest of the world. And I think, for instance, in what might be interesting also, that if you look at the shares between the different cards for BSP and ARC, for instance, if I'm right, for instance, UATP, the airline travel program. I mean, they have a larger share in the US because it's more heavily used. I think the United Airlines, for instance, is a large issuer of the OTP card. So a lot of corporate customers use that card, and that together with American Express, I think they represent already something like 50% of all the payments. So that's also quite a different setup. In Europe and the rest of the world, it's not that heavily used.
What is the role of GDSs in flight payments?
Global distribution systems obviously are the entry point for the travel agencies, where they find the available seats and the fares and ancillaries and anything they need to make a booking. If the itinerary has been selected, if the PNR has been created, then the total amount needs to be paid. And they can basically indicate there, depending on the settings for the travel agency, if for instance it's BSP cash or that a card is required. If the choice is to pay that itinerary with a card, then at the GDS level, the card details are then used to actually, through their own connection with the card schemes, to authorize, to check if the card is valid, to authorize if the amount can be charged to that card. And once they get a positive response from the card scheme on that particular request, then they store the authorization results in the booking, in the PNR, and then basically the ticketing process starts and the settlement process starts, and then through a couple of steps, the transaction ends up typically with the airline, so that they can then forward the transaction to their acquiring bank or to the card scheme if it's American Express, for instance, for settlement, for clearing. And so the role of the GDS is accepting in a secure way those card details from the travel agency. Could be manually keyed in, could be API, etc. And then also to authorize the transaction and store the authorization response details in the booking, and then make sure that it's together with the itinerary details. Level 2, level 3 data is then sent forward through RED files, DISH files, etc., CSI files to the airline, so that they can then send it to the main difference between the PSS, where for the direct sales of an airline, and the GDS for the indirect sales, is that the PSS is one combined setup where you do the authorization and also the settlement is done by the same company, by the same party, and with the GDS it's completely decoupled. So they only do the authorization, and the settlement takes place 1-2 days later through different systems. So it's not the same technical infrastructure that takes place in the whole process. It's completely separate, and that's quite unique in the world of payments. It was hard to explain to a lot of people, but that's the way it's been set up already, 50 plus years ago, and that's still the way it works.
What are NDC alternative payment methods, and how do they work?
If you look at NDC, so the way that the standard was set up, there are basically two forms of payment that are regularly available. That's BSP cash and card, and card can be directly with the airline, can also be through BSP, by the way. APMs are not supported as such in the standard because of the redirect, for instance, to a bank or to a wallet. But what the agent can do, if they agree that with the airline, is to actually hand over the customer to the airline, have them land on their payment page, a dedicated payment page, and then have multiple forms of payment available there. So obviously not BSP cash, because that would not be an end customer product, but the different forms of card payment, but also alternative payment methods, APMs, could be there so that the customer can check out directly with the airline. And then the only challenge there is that then obviously the airline needs to be able to feed back to the travel agency what happened to the payment, so that they can also update the booking records with the correct payment data, and also, for instance, know how it was paid, what the amount was paid, what currency, etc. And also can keep that in mind when they then further down the line reconcile, the reservations with the individual airlines. So you build in flexibility there, but then. And that's also something that IATA would love to see as a result of NDC, to give back control to the airlines, that instead of the travel agency dealing with the payment of the customer, that it actually becomes the responsibility of the airline, and that they have more control over the end-to-end process. What comes with control is also responsibility and liability, and also cost. So that's not always considered because the travel agencies actually do a lot of heavy lifting, for the airlines, when it comes to payment security, payment architecture, connections to payment partners, etc. If you would like to copy that, then obviously, you also need to invest in that as well as an airline. And also, you need to do your own fraud screening, you need to do your own 3D secure and those kind of things. So, it's always best to take a step back and have a more holistic view on it. It's okay, for which travel agencies does it make sense actually for us to do it ourselves, and for others maybe not, because their requirements might be so exotic that it doesn't make sense for the airline to invest in it, right?
What is the best way for travel agencies to pay airlines in case of the direct connection?
If it's a direct API, so not NDC, and it's not connected to, for instance, IATA Financial Gateway, so that also the reporting to the BSP is automatically triggered, then it's a bilateral setup agreement and technical integration. And that means that in practice, in most cases, the travel agency uses one of virtual cards to insert in the booking. So they take payment from the end customer, and then at the time that they then pass it on to the airline, they insert a virtual card so that the airline at the time of the transaction can then also authorize that card and process that card. So that's the most common thing, because then also the travel agency is protected against non-delivery of the service, and also the airline knows that the moment they authorize the virtual card, that the money is secure, right? It's guaranteed. So that's typically a good exchange, a good value exchange for both the travel agency and the airline. There might be other setups where there's a bilateral billing agreement where the airline gets paid once every other week or once a month, but I think the most common way, and from a reconciliation automation perspective, the best way is to use virtual cards, because that makes it as seamless as it can be.
How can travel agencies persuade airlines to accept a virtual credit card, despite the fact that it's costlier than BSP cash?
The cost associated with that card is something that can be agreed upon between the two parties, right? So it's not that a card is per definition extremely expensive. I mean, there are very cheap but to very expensive cards, and anything in the middle. And in the end, it's important that both parties come together, see it as a win-win, and agree on the payment mechanism used to move money from A to B. And once you're transparent about it, and you make an agreement about it, then it shouldn't be a problem. Then the airline should be able to see the added value of the travel agency, and the travel agency should consider the concerns of the airline about the cost, right? So, but like I said earlier, aspects like full automation, flexibility, protection, cash flow, it all plays a role. So in the end, you need to take a very holistic view on it and basically score all the aspects that play a role, both on the travel agency side and on the airline side, and come to an agreement that, hey, if we use cards, then we tick a lot of boxes from process perspective, but potentially the cost is high. But if we find a middle ground in the cost, then we have the best of both worlds. Then we have a win-win, and that's the idea. But it all comes with communication, transparency, and working together on it. And I think what we've seen in the industry, and there's a well-known European airline that recently changed their mind around how they collaborate with travel agencies, is that if you don't trust each other, or you don't want to work together because you think you can do everything by yourself, that's not a good starting position, right? So, but if you see the added value of having a distribution partner that brings you additional value and additional sales and helps you to fill empty seats, then you also know that it comes at a price tag, right? So, but you first have to take that hurdle to understand it, and then you can take it further from there. And I think that particular airline probably has realized that it's better to work with travel agencies and to accept virtual cards than to always work against them and always be in the courtrooms, right?